In New York, this is Bloomberg Technology. Coming up in the next hour, Slack jawed. Slack shares a plunge after the company's first earnings report since its trading debut. At issue, service problems and competition from Microsoft. Settlement reached. Google will pay $170 million as part of an agreement with the FTC for violating children's privacy on YouTube. Critics say it is not enough. And chasing Tesla, Porsche's new luxury sports car, the Taycan Turbo, seeks to overtake Tesla. We'll run down the features of the Taycan, including, of course, the price. Now, Slack shares are plunging in after-hours trading after the company gave its first earnings report as a public company. Now, while Slack beat analyst expectations for both second quarter revenue and earnings, it projected slower sales growth for the second half of the year. Slack said revenue will be about $154 million in the third quarter, signaling that strong competition may dent the software maker's rapid rise. Shares are falling about 15% in the post-market following the results that is poised for a record low. Joining me from San Francisco to discuss is Bloomberg's Nico Grant, and on the phone, Gartner Research Director Larry Cannell. Larry, great to have you. We've had a few hours now to digest the earnings. Give me some of the big concerns here. Is the big concern that top-line revenue growth?
Well, that's something I don't cover. I work for Gartner for technical professionals. So I talk to the geek in the room. I talk to the IT professionals about installing and securing the software. So I can tell you from my perspective, there's still strong interest for Slack from our metrics. If you look at the inquiries we get and other metrics we get around our research reports.
Well, if you say that there is some strong demand here for Slack, talk to me a little bit then about the competition side, namely from Microsoft.
It's pretty stiff competition, but what Microsoft is trying to do is push Microsoft Teams and this type of collaboration into the infrastructure. And so it becomes kind of this horizontal service that everyone in the company has access to. And we can tell you, based on our surveys in this past year, that Office 365 is increasingly being attributed to collaboration and enterprise collaboration, where in previous years it was more associated as an email outsourcing service. So, in my opinion, as Microsoft has succeeded with Teams, it's also succeeded in building awareness of the need for collaboration and the ability to collaborate more effectively in the cloud, which should indirectly help Slack and increase interest in the market overall.
I want to bring in Nico Grant. He's been covering Slack for us at Bloomberg Technology. So, Nico, sort of give me your top takeaways here. What happened to the top-line revenue growth?
Right, so Taylor, this is an instance in which Slack's best wasn't good enough. We had seen for years that Slack was one of the most hyped unicorns in Silicon Valley. It raised at least $1.3 billion because of all of that anticipation, and the stock went down 15% today. The stock went down about 20% after that first pop when it went public in June, and the reason why is because the company is decelerating. And so whether we consider the revenue forecast for fiscal 2020, which was just short of the consensus estimate of Wall Street analysts, or if we consider the growth in the number of paid customers and large customers. But for many metrics, Slack is not growing as quickly as it once did. And of course, there's a law of gravity when it comes to these cloud applications companies. And the larger that you get, the more difficult it is to continue growing at the same rates. But Slack is a money-losing company. And so, from an investor perspective, if you're not making money, then you need to be growing. Well, and if you're not making money and you're not growing as quickly as we want you to, then we're a little bit concerned.
Well, you not only got the investor perspective, but you just got off the phone from the CEO. What did he have to say to defend top and bottom line growth?
Yeah, I just spoke on the phone with Stuart Butterfield, the CEO of Slack and co-founder, as well as the CFO. And Butterfield said basically, this is very strong growth for our business. The CFO echoed that sentiment. They said that when you consider the amount of customers who are spending more than $100,000 each year with Slack, so think of this as, the largest businesses in the world, that number increased by 75 to 720, but that's still a slower pace of growth, and they're very much looking forward to a current product that they have coming out right now, which they think can continue to improve things, but they're going to focus and tell investors on the earnings call, which has just started, about the customer stories, basically. Tell them, what companies are using Slack. They've seen lots of growth in Europe, including Germany. They're also seeing growth in the US, they say, but essentially they are sticking to their line of this is good enough, even as investors clearly are not happy right now.
Well, I want to bring in Larry back into this conversation because Larry talks sort of about the future of Slack, and part of that is bringing in some security tools. And I wonder, is that a future growth area for them? How does that compare with others?
Well, when you talk about Slack, you have to realize there's two different levels, different families of products. One is Slack Teams, which you may be familiar with. That's the free version of Slack, and it's a paid version of that where you buy it on a team-by-team or workspace-by-workspace basis. Then there's the Slack Enterprise Grid. That's the enterprise license product where you get all you can eat, all you can consume teams and workspaces. That's who I talk to our clients about most often. And that's where they're investing a lot into the security products as well. So they recently released a new desktop client, which handles more effectively a larger number of workspaces. So they're expecting some growth there. They're also building in some native mobile security features to kind of very similar to what Intune does with Microsoft, but to be able to control how the application behaves on a mobile device and to control the content that Slack uses on the device. That's all good stuff to help them compete and help them build credibilities with the IT professionals that I talk with.
Like you said, all good stuff, but certainly increasing competition. Thank you to Bloomberg's Nico Grant and Gartner Research Director Larry Cannell. And as a reminder, Bloomberg Beta, an early stage venture fund backed by Bloomberg LP, is an investor in Slack. Now, Wework is adding a woman to its all-male board of directors while it prepares for an IPO. Harvard business professor Frances Frey previously was a senior vice president at Uber. Wework says that within a year of going public, it will add another director with a commitment to increasing the board's gender and ethnic diversity. The office rental startup could begin a roadshow for its IPO as early as next week. And coming up, $170 million. That's what Google will have to pay as part of an agreement with the FTC for violating children's privacy on YouTube. This is Bloomberg. Another fine for Google. This time, YouTube has agreed to pay a record $170 million to settle claims that it violated children's privacy laws. Most of the money will go to the Federal Trade Commission. $34 million will go to New York State. YouTube has been accused of failing to obtain parental consent and collecting data on kids under 13. To discuss, I'm joined by Carl Szabo, Vice President of NetChoice. NetChoice is a tech lobbying group that counts Google as a member. And also with us, Bloomberg Technology's Ben Brody, who has reported on this story. So, Ben, let me start with you. The fine doesn't seem like much. How big of a deal is this?
It's certainly easy for Google to pay it. It's a drop in the bucket compared to their annual revenue. It is, however, a very large fine by the standards of children's privacy. It's 30 times larger than the previous record, which came in February with TikTok. Similar issues, collecting email addresses and names without parental consent on the popular teen video app. So you have a lot of people who are saying that this isn't really going to make a dent in Google's business practices, but it is certainly setting a record for this particular space.
So, Carl, you're sort of taking the flip side of this. Give me your breakdown. What do you make of the fine and then, of course, of the ruling to limit some of the ads and the commenting on children's videos?
You know, thanks for asking. As Ben laid out, the fine is 30 times larger than any prior fine under COPPA. Now, what surprised me so much was the fact that the FTC was even able to extract this fine, given the fact that I think the FTC has gone well beyond the statutory limits of what the COPPA law allows. Essentially, YouTube is a general audience website. Every user on YouTube says that they're over the age of 13. The terms of service say if you're under the age of 13, don't use YouTube, you can't use YouTube. And so there's really no there for the FTC to bring this action. I think it sets a really dangerous precedent going forward by suggesting that a general audience website is now going to be decided by the FTC to be a child-directed website and subject to COPPA. I would say for anyone who operates a website talking about Harry Potter or the Avengers or anything that could possibly be related to children needs to be worried that the FTC may be coming for them next.
Well, Carl, to be fair, we've gotten a lot of pushback from some of members of Congress. We have a tweet, of course, from a senator, and I will read it out to you. Senator Ed Markey, who's saying that YouTube knowingly broke federal laws. They're tracking kids in order to rake in advertising dollars without permission from parents. But the FTC let Google off the hook with a drop in the bucket fine. Not a single Google executive or investor will bat an eye. Carl, what do you make of that? And frankly, the reaction from senators?
So Senator Markey should know very clearly what the law does and doesn't allow, since he helped write it when he was in Congress back in 1998. And under the law, there are two ways that you're subject to being under COPPA. You're a child-directed website, or you knowingly collect from people under the age of 13. YouTube did neither of these in this case. So I think for a lot of people who are saying it's not enough, I think for a lot of those individuals, it will never be enough. I think that for them, whether the fine was $170 million or $170 billion, it will never be enough for a lot of people who just fundamentally dislike these platforms and their right to give us free services.
Ben, what do you make of the end of that tweet that said not a Google executive or investor will bat an eye? Did Google executives, were they happy about it? And what is the read-through to other competitors as well?
Well, the market certainly shrugged it off. Google was trending up a little bit all day. The YouTube CEO, Susan Wojcicki, did come out and outline some of the changes that they're making and more or less welcomed this, a little bit of a chastened tone, but more or less was saying that this was something that they were ready to do after some consultation. I do think it's important what Carl is saying. YouTube was going to its advertising partners and saying, look at all these children that you'll be able to reach on our website. So it does seem like there was, or I think there was some knowledge there that the FTC was able to demonstrate in its complaint. But the question is, will they be able to demonstrate that in the example of an over-the-top streaming service? That's essentially the same thing. That's a company that provides a platform, and then you have content creators who are able to appear on that. If one of those is, the studio that's putting out Harry Potter, does the streaming service need to worry? Same thing with a connected device. Do they need to worry if some of those apps are kids' apps, but it's generally a smart speaker that's general audience?
Well, Ben, I imagine we will find out, and you will keep us apprised of all the developments. Carl Sabo of NetChoice and Bloomberg Technologies. Ben Brody, thank you for joining me. And I want to stay with Google here because there's another story that caught our eye. Now, the tech giant and its industry allies are making a late bid to water down the first major data privacy law in the U.S. According to documents obtained by Bloomberg, the companies are seeking to carve out exemptions for digital advertising. A lobbyist for Google recently distributed new language to members of California's state legislature that would amend the California Consumer Privacy Act. As currently drafted, the law limits how Google and other companies collect and make money from user data online. It is due to kick in the next year, and there are only a few more days left to amend the law. So to discuss, I'm joined by Bloomberg's Kardate Mehrotra. Kardate, thanks so much for joining me. Put simply, we know why they want to water down the law, frankly, because that's a big source of revenue. So my next key question is, are they successful?
Well, so far, no. This has been a debate that's been going on for years now, and it's just now struck the California legislature because of this first data privacy law in the United States going through their corridors. And for the last couple of years, they've been insisting that there need to be exemptions for targeted advertising in order for them to maintain this very lucrative business model. So far, their attempts earlier in the year to pass legislation to create an exemption was stalled in a Senate Judiciary Committee, and now this last-minute effort, they have yet to find a sponsor to push it through. That doesn't mean that this argument is over. Even if it doesn't succeed in getting to an amendment phase and signed by the governor by the end of next week, there's still the end of this year and the first 6 months of 2020 when they could wrestle away some sort of exemptions to legalize the targeted advertising.
Any specific exemptions or changes that really struck out at you?
So there's a couple that are interesting. One is, so all of this relates back to how they aggregate your data. And so much of it, according to the CCPA, cannot include personally identifiable information. And so Google's looking for ways to collect data through your browsing habits that don't directly tie back to you as a person. And one of those ways would be to collect data on a website where you've visited and then to analyze that under a pseudonym. And what they would then be allowed to do is take that data and perhaps distribute it to a competitor of that original website for them to use and monetize. Or just broadly speaking, they want to change very small sections of language, like this business purpose is defined as, to instead say this business purpose is defined to include. And that provides some leeway for business practices to include what they need them to include in the future with less regulatory oversight.
Bloomberg's Kartite Mehrotra, thank you for joining me.
Sure.
And coming up, Apple begins to borrow with billions and billions of dollars squirreled away. The iPhone maker heads back to the bond market. We'll look at why. That's next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. What do you do when you have nearly $200 billion just sitting around? Well, if you're Apple, you go back to the bond market. That's what you do. And for the first time in nearly 2 years, the iPhone maker is raising money via high-grade bonds. The offering is coming in 5 parts, the longest of which is a 30-year security. To tell me more, we're joined by Bloomberg's Molly Smith. You cover corporate bonds for us. So frankly, why? They don't need the cash.
They don't, but so do a lot of other companies that have been in the bond market this week. And I remember one investor told me this so perfectly. The kind of company that you want to lend to is the company that doesn't need it. So that's why you see Apple always does so well in the bond market, especially when they're coming to fund what's largely anticipated to be shareholder returns, which bond investors don't want to give their money to shareholders. But in Apple's case, they're just such a good company to invest in, and that they have great cash management that they keep lending.
Well, if you come into my terminal here at GTV Go, one thing you will say is cash, again, more than $200 billion, and then some of the debt outstanding. Now, I wonder, when we talk about use of cash, you mentioned shareholders, how much of this as well would be going to pay down debt or fund future acquisitions?
They don't break out the terms for us, just like general corporate purposes. So it could be any of those 3, could be capital expenditures, anything really under the sun of what they want. But it makes a lot of sense if you're a company like Apple, when we're looking at that 30-year bond and what the interest savings will be compared to their outstanding 30-year debt. It comes out to be more than $7 million saved annually in interest expense.
And I wonder, this is It's sort of a broader question, but it pertains to Apple. They're high grade, and we hear more and more that some of the lower grade companies have been doing really well because you can't get anything as an investor. Your AA, AAA bond is frankly 0%. So you've seen really a lot of money flood into that high grade area. But so is there still demand for a AA Apple bond?
Everywhere. Yes, I think I had heard the books on this were up like beyond $20 billion for what they were doing. Like this was very well subscribed. And when you just look at the broader macro picture right now and all of that negative yielding debt that's in the world, right? Like what is the number now? Nearly $17 trillion. Apple bonds coming in at around 3% for 30 years look great compared to that.
Well, and we have up there on the screen sort of the different tranches, 5-year or 10-year, 20-year, 30-year. Any idea if an investor would be willing to go out 30 years, or is there a little bit more demand shorter in on that duration given, frankly, we don't really know where the Fed is going from here, sort of what that means for different maturities.
Right, so we did see this price already, and it looked like there was a lot of demand skewed actually toward the longer side. So around, I believe it was $1.5 billion of the 7 was in the 30-year part. So plenty of people still going well out the curve here.
How does that compare to previous years? Because as we know, they haven't come to market in 2-3 years. How do spreads now compare to the last time they came to market?
Well, spreads are, and it's not really so much about spreads as it is about all-in yields in this case, because treasuries have just rallied so much. So while spreads have been fairly flat so far this year, when we've seen that rally in treasuries because of all those macro headlines with the trade tensions, with the Fed expected to keep easing, that's made all-in yields so much lower. And that's why we've seen so much issuance, especially longer out the curve where the 30-year has come down so much.
Well, we talk about the 30-year, and I wanted to bring in another chart in my terminal. Coming here at GTV Go, we're frankly looking at a 30-year option adjusted spread. I'll call that an option remove spread. So you take out the options, and this is basically what a 30-year yield, 30-year bond price has done. Apple not rallying as much as maybe a lower rated peer like a Qualcomm. What do you make of this, and particularly Apple and some of these other high grade companies that have done well, but maybe not as well?
Yeah, I mean, I think that like when you're looking at this on a spread basis, like it can be a little harder to see the whole picture just because so much of what we've seen so far this year in investment grade it's been really all about the treasuries rally. So that's why investment grade debt has been the best performing asset in fixed income this year. Like returns of 14%. Last year we were down 2.5%. So this is just a massive turnaround, and really have treasuries to thank for that.
Great time for Apple to come to market. Thank you. That was Bloomberg's Molly Smith. And coming up, 2020 elections are around the corner, and big tech is looking to ramp up its security. We take a look into the meeting at Facebook's headquarters with the FBI next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in New York. Now, the trade war between the U.S. and China has finally hit U.S. tech giant Apple. President Donald Trump's 15% China tariffs were entered into the Federal Register on Friday, dragging the largest U.S. technology company into the fray. Now, as we've discussed on the program, some are saying investors are now looking to software as opposed to hardware due to the trade war. IDC President Crawford Del Pret says tariffs are having less impact on IT spending than was originally projected. I spoke to him earlier.
Compared to the headlines versus what's actually been happening, what we've seen is that tech spending actually hasn't been that significantly affected as a function of a lot of the tariff talk. A lot of that has to do with kind of where we were in the tech cycle. You have to remember that tech is infused in the economy now. It's infused in our work lives. It's infused in the infrastructure, and it's also infused in how we entertain ourselves. So what we saw was that in a lot of markets, there was a huge data center build out, and server spending, storage spending was really, really high. If you look at infrastructure spending last year, it was over 20%. Now, if we had gone back 3 years and said we thought infrastructure spending would be over 20% as a function of the build out of the cloud, no one would have taken that seriously. So that really muted overall spending impact associated with the tariffs. What we saw last year was about 9% growth overall, which is very high.
So where are we in that cycle now? As you look forward, let's say, to the rest of 2019 or 2020,
yeah.
Are we in that cycle where we can still start to see tech spending, or are we starting to see some uncertainty really start to play in?
Yeah, so Taylor, it's interesting. We're starting to see that shift now. We're starting to see where customers are starting to take a pause. They're starting to lock up a little bit and say, look, we can't run our business by these little bits of information that come out. We have to really understand and be able to understand the long-term impact of imposed tariffs going forward. So what we've seen is that we're starting to see a deceleration, and we're seeing a deceleration in spending overall. But it's primarily that we're seeing customers start to take a pause, but we're also starting to see that infrastructure build out is starting. Companies are starting to take a step back from that and starting to slow down their overall spending. So our expectation for spending this year is somewhere around about between 4 and 5% for overall tech spending.
When you talk about customers, there is hardware and there is software. And
right.
So far, it appears software for a little bit has been relatively insulated compared to hardware. Is that accurate?
Absolutely. So it's really interesting, and we have to kind of remember this as a service economy and what the long-term impact of the as a service economy is, and that is that it really becomes something that impacts are much more muted in terms of overall spending. Companies don't necessarily move away from their Salesforce.com subscription or their Workday subscription over time, but you can definitely say to your employees, you know what? We're going to make you have your PCs for 5 years instead of 4 years. We're going to push our server infrastructure out another year before we do an upgrade. So we're definitely seeing that hardware is the first stuff that gets muted. And really, smartphones is something that really gets muted because it's just not that hard for a consumer to say, you know what, I'm going to wait another year before I buy another smartphone.
What I really liked about your research note was talking about the composition of spending between the U.S. and China. China, much more a hardware economy relative to being a software economy. Where are you seeing their hardware companies start to slow down? And then wouldn't China go in and support that hardware economy because they know they are so dependent on it?
Yeah, so this is a fascinating trend. So what we see is that when you look at the overall IT spend, about half of China's IT spend is associated with hardware products. In the U.S., that number is closer to about 20%. So what we call the sort of top of the stack, the applications, the services, those things are not areas where China producers do as much business compared to, say, the bottom of the stack, which is things like semiconductors, things like PCs, things like assembled hardware. But in the most recent quarter, you saw some fascinating trends. So, for example, if you look at the China server market, you're seeing this move toward nationalism, right? You see H3C up 32%. You see Huawei up 19%. You see Inspur up 32%. You see Dell down 23%. So you see that it's the Chinese vendors, that this is the server growth in China. It's the Chinese vendor that is getting favored by the local economy. You see in storage, same kind of thing. The market in China was up about 7.8%. H3C up 29%. Huawei up 16%. Dell down 24%. So really what you're seeing in China is that you see the local brands are the ones that are being supported, either through government-directed contracts or through companies that are relatively close to the government and want to buy the national brand.
On the flip side of that, are U.S. software makers then relatively more insulated because we're not getting the impact of hardware that has been most affected to date by tariffs?
They are. The U.S. Software companies in particular are in a really nice spot in this whole trend because there aren't Chinese competitors per se. As well, it is very, very difficult for them to see sort of a significant impact because of this software as a service, this sort of as a service buy that we've seen over time. What we've also seen is we've seen a lot of the service providers or a lot of the large service providers in China start to resell Western software to global multinationals in China. I was just there a few weeks ago and saw there are some white label deals that happen where you're seeing Western software brands being sold by service providers to companies in China that want to buy sort of Western software. That has the impact of muting piracy and not seeing as much piracy because you have to buy it as a service legitimately. So they are absolutely insulated.
That was Crawford Del Pret, president of IDC. And 2020 election security was the subject of a meeting between Facebook and Google executives and members of the U.S. intelligence community. This is according to a person familiar with the talks. With details, I want to go to Bloomberg's Kurt Wagner in San Francisco. Kurt, any idea what was said in that meeting?
Well, we're told that the conversation was basically to prepare for 2020, start talking about what are the biggest threats that these companies, these tech companies, but also these intelligence agencies might face, and also to kind of set up some kind of plan so that these different sides can come together and have a more open line of communication. I think after 2016, when we found out that Russia started to use Facebook, Twitter, and others to spread information and try to sow dissent among voters, I think we realized that these tech companies and the U.S. government really weren't talking very much during that whole process. And so I think part of this is just simply establishing those lines of communication and making sure that if this does happen again ahead of 2020, everybody is on the same page and everybody's prepared.
You mentioned Facebook and Twitter. We also know that Google, Microsoft executives were there as well. Any indication what a Google or a Microsoft, what their role would be in that as well?
Well, Google obviously owns YouTube, right? And that is a main way that a lot of people spread entertainment videos, but also news and information. And we've seen a lot of viral hoaxes and things go onto YouTube and get spread far and wide. And so I think when you look at that, when you look at Microsoft with Skype and other communication services, I just think you bring these companies together that have a large user base and a large technology base of services that people use to communicate and spread information. That's really the biggest concern that I can see here, is that they're worried that stuff is going to get onto these services and kind of spread like wildfire without being able to be contained.
Would you expect any real piece of information to come out of this, or did it feel more like a planning meeting?
The way it's been described to us by multiple people is really just a planning meeting at this point. I think we're all pretty aware, just based on what Facebook has done in terms of taking down these kind of coordinated campaigns from that are originating in countries like Russia and Iran and even China just a few weeks ago. I think there's a lot of people who feel that they have identified the potential culprits here when it comes to what foreign governments might try to influence a U.S. election. So I don't think it's necessarily that they're trying to, find the actors in that sense. So I do think, though, that there will probably be more detailed conversation around what specific networks of people within those communities might be a real threat.
We know that relationships between big tech and U.S. intelligence and U.S. security officials have been strained, to say the least. Any idea if this was also helped to repair perhaps some of those relationships as we head into the election?
Yeah, absolutely. I think, one source described this to me as a chance to come together and talk about shared goals. This idea that, hey, everyone here is on the same side. Everybody wants an election that runs smoothly and doesn't have any, issues of foreign interference. So I do think part of this is about kind of showing people that these two sides are coming together to work together. And again, I mentioned this earlier, but that was a huge problem in 2016. Not everyone was talking with one another. So I think a big part of this is just simply a demonstration that everyone's on the same page.
Like you said, a good first step as we head ever close to that election. Thank you. That was Bloomberg Technology's Kurt Wagner. And coming up, taking on Tesla, Porsche powers up its own electric sports car, but will it be enough to charge past the Model 3? We'll discuss next. This is Bloomberg. Fashion retail app Poshmark is delaying its IPO until next year. Bloomberg has learned that the California company wants to focus on boosting sales and improving its execution. Poshmark is a resale marketplace for secondhand high-end clothing. At one point, the company had hoped to go public this fall. Porsche getting into the electric car market. The automaker, famous for its 911 sports car, just unveiled the all-electric Taycan. The new vehicle will start at a cool $90,000 with the top price nearly double that. Porsche's parent company, Volkswagen, is hoping this will help cement its ambition to be the world's leading seller of battery-powered vehicles. Bloomberg's Matt Miller caught up with Porsche CEO Olive Blume to see what's under the Taycan's hood.
It is an exciting moment for us being able to present the new Taycan after a 4 years engineering period. And you're right, we have a lot of pre-orders, and in the last weeks it raised from 20,000 to nearly 30,000 pre-orders. And we are very proud of it because all these Porsche fans haven't already seen the car before the production and haven't already driven the car. So today we will mention what will happen in the market and what will be the response.
They trust your design language, they trust the dynamics of Porsche. What can you tell us about the financing though to build the car? I think you're the first car maker ever to develop a car with a promissory, at least partially with a promissory note, right? How did you come up with the idea? How did that work?
Yeah. When we did the calculation, electromobility, you have much higher material cost, you have all the investment you have to put in. And when we thought to calculate the product, we asked all the people in Porsche to help to be able to finance the project. And so everybody put a part of the increasing salary of the next years for being able to finance the project, beginning with the board members to all our people working in Porsche. And that was the first time in the automotive industry doing this. And at the end it was successful, being able to produce the car in Germany, in Stuttgart-Zuffenhausen, where the heart of Porsche is, where we produce the 911 and the 718.
Will you always make the car in Stuttgart, or will you always make the car in Germany? Is that something that your customers demand?
For our brand is very important. Having cars designed in Germany, engineered in Germany and built in Germany, it's a very important argument. And we thought to go to a new era with a full electric Porsche, we should do it where Porsche comes from Porsche Zuffenhausen, where we built the first 365, 56, and then the 911, and now the Taycan, and connecting our tradition with our future.
This will likely outsell the 911, and the starting price is about the same, right? $90,000, 90,000 euros. It's somewhere in the ballpark of a base 911. Do you have to sacrifice a lot of margin for that?
No, we will start first of all with our top-of-the-end projects with the Taycan Turbo S and the Taycan Turbo. And later on we will come with some base products which will begin a bit below 100,000 euros or dollars. And we have still a good margin. It isn't so high as in other projects we have, but we see the Taycan as a starting project for e-mobility, and there's a lot of potential in future for innovation, but also for economic scales.
That was Porsche CEO Oliver Blume speaking to Bloomberg's Matt Miller. And to talk about this new electric vehicle, let's head on over to Detroit, where Bloomberg Auto reporter Chester Dawson is standing by. Chester, frankly, the photos look incredible. How cool is this new electric vehicle?
Yeah, I think they nailed the cool portion. The question is how many buyers are going to line up for it. But, I mean, it's been widely anticipated, and they made a big show of it, as you saw there, with the debut in Niagara Falls. But it represents a big, bet that the company's taking on the future of the auto industry, and they're really, in one sense, partially decoupling from the gasoline engine, which has gotten them where they are, to this new, idea of electrifying vehicles. And they're basically saying in the next 6 years, half of all their vehicles are going to have an electric plug.
Talk to me about the price point. Starting at $90,000, it's almost triple of Tesla's Model 3? Are they going after a different customer, or is the price point something that Tesla shouldn't be worried about?
Yeah, well, it's more a direct competitor to the Tesla Model S. In fact, it costs more than that. You're talking about north of $100,000 for the Taycan. And, the Model S, it has variations, but it's about $100,000, give or take. So it's a much more high-end vehicle, a bit more niche, clearly, for a very well-heeled buyer. The Model 3, the premise was that it was more of a mass-market vehicle. I mean, it's still very pricey. But this is more of it's more in line with Porsche's strategy of being, a luxury vehicle maker. And it's going to be very interesting to see if it can take on the Model S, which is a older vehicle now. It's been several years since it's had a full update.
What does this mean for Volkswagen and future plans into the electric vehicle market?
Well, it does represent kind of a beachhead. I mean, VW has, as part of a settlement for its diesel scandal, been building out infrastructure for charging stations across the country. It's got deals with Walmart, and it's basically building the infrastructure to support vehicles like this. So clearly, they're leveraging that, and I guess in some sense, this is kind of a down payment on that future. I mean, it remains still unclear how much demand for electric vehicles there is, particularly in this country. But clearly, for some high-end buyers, it does have a certain appeal. And the Taycan, as you mentioned at the outset, it's a very sexy car.
Well, you talk about this country, and largely the electric vehicle market is a bet in China. How concerned are some of these automakers that China electric vehicles just this week alone fell for the first time ever in July?
Yeah, I mean, it's a big issue because I think the industry was counting on China to lead the way. Now, it has to be said that's part of an overall downdraft in the Chinese auto market. It's not just electric vehicles, but certainly it's kind of thrown some water on the idea that China's growth is just going to keep powering the industry, particularly in the electric vehicle space. And I think it's maybe given some industry executives pause about just how aggressive they can be in debuting new product and kind of depending on the Chinese market to be there as a core source of demand.
Wonderful. Bloomberg's Chester Dawson, hopefully getting a test ride. Thank you for joining me. And still ahead, gold is on the rise. But what does this mean for crypto miners? One mining entrepreneur tells us about the future of cryptocurrencies next. This is Bloomberg. Canadian businessman Frank Giustra is well known for financing everything from films to mining companies. He founded production company Lionsgate Entertainment and amassed a fortune building the company that would become Goldcorp. But more recently, he's turned to another form of gold, and it is cryptocurrencies. Back in 2017, Giustra backed Hive Blockchain Technologies, one of the first publicly traded stocks to provide exposure to crypto mining. Bloomberg BNN sat down with Giustra and asked the state of the crypto market. Take a listen.
I was curious about that sector. I really thought that there was a place, and I still believe there's a place for cryptocurrencies, including Bitcoin and Ethereum and all of these things. My only concern with cryptocurrencies is that if they, and this is a personal opinion, and I've said it to many of my friends, if cryptocurrencies ever become a threat to any sovereign currency, they will be eliminated somehow. You cannot eliminate gold. It's there. It's physical, and it's global, and it's been around for 5,000 years. And it is true money. And so there is a difference for me between crypto, which has a little bit more risk than the physical gold.
But that idea of, for a while there, because gold wasn't moving anywhere quickly, in the mining world and in the world of raising capital, a lot of people got excited about the idea of Bitcoin mining startups or financing that. Is that sentiment now changing because of this rapid rise in gold?
I think it is changing somewhat. I think the main reason it changed for cryptocurrencies is because they came off their highs. It was an incredible. I think a lot of us that you mentioned Hive, we got lucky in Hive. We just happened to launch it at a moment in time when Bitcoin was going from what it was, 5,000, 6,000, all the way to 20,000 in a matter of months. That's why the stock ran up. What we did, which I thought was the intelligent thing to do in that environment, was to raise a lot of money and buy a lot of the mining operations, which at least gave it a solid base. We raised about $200 million and put it to work. But, the fact that it peaked at 19,000 and then collapsed immediately took everything down with it.
That was Lionsgate Entertainment founder Frank Giustra. Now, Roku shares surged Wednesday after D.A. Davidson raised its price target on the stock to $185. That is a straight high. Analyst Tom Forte affirmed his buy rating on Roku, saying in a note that he has increased conviction in the company's ability to, quote, exploit the billions being spent across the industry on proprietary content. He further noted that 1 in every 5 U.S. households had a Roku run set in 2018. The streaming hardware company has soared more than 70% since early August and over 500% since a December low. That does it for this edition of Bloomberg Technology, and Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.